Plenti versus Wisr, personal loan lenders. So in today's video, I will talk about an online peer-to-peer personal loan lender in Australia, which goes by the name of Plenti, ticker code PLT. This company was previously known as RateSetter. They completed an IPO in late September this year and raised $55 million at $1.66 per share. This valued the company at $280 million. About half of the money raised would be used to fund their loan book. The other half would be used as working capital, including for sales and marketing. So after the IPO, the share price tanked badly. I made this video in late October and the share price was around $1.10. As of the end of September this year, their loan book was around $300 million. The average loan size is around $12,000, consisting of unsecured personal loans, secured car loans, and some renewable energy loans, which are loans to purchase solar panels and batteries. I'm trying to decide for myself whether I want to invest in Plenti or Wisr, which I analyzed last week. So this video is not financial advice and it is not any form of advice whatsoever. I am simply sharing with you what I personally think about these companies. If you wanna see more stock analysis videos from me, please do subscribe to my YouTube channel. And don't forget to hit the like button as well. So Plenti is a bigger company and it has about 3 times the size of loan receivables compared to Wisr. Both companies are losing money each year. I'm actually new to doing stock analysis, so if you have an idea why these companies have been losing money for a number of years, please do let me know in the comment section down below. I can see that Plenti loses less money as a percentage to its loan book compared to Wisr. I'm not sure why, but Wisr spent 15% of its loan book on general and admin expenses each year. On the other hand, Plenti spent only around 3% or maybe 4.5% if you add the product development expenses as well. Both Plenti and Wisr have pretty good quality loan books and relatively small credit losses. Wisr seems to have the smaller loan write-offs. At the moment though, I'm not too sure if this is small because their loan receivables haven't fully matured yet because they are a newer company and the majority of personal loans are repaid over a period of 5 years, and sometimes you do not quite know how much you lose until 3 to 5 years down the track. On the screen you can see a page from the prospectus document provided by Plenti. If we look at the loans they originated in the calendar year 2019, they have only a return of 0.7%, but they expect the loss to eventually reach 3% to 4% by the time the loans are due to be fully repaid. The other difference between Plenti and Wisr, and this is probably the more significant difference, is in their funding model. Plenti is primarily funded by retail investors. It is a peer-to-peer lending platform. In fact, I personally just lent out $1,000 to Plenti a few weeks ago because they gave me an interest rate of 6.4% and they also gave me a $25 cashback. So the interest I get in my first year is effectively almost 9%. Obtaining funding from peer-to-peer lenders, from peer-to-peer individuals like yourselves, tend to be expensive. And because now they want to grow into the car loan market, which requires lower interest rates, they cannot afford to keep raising money through the peer-to-peer channel. So now they have started to move towards obtaining funding from warehouse facilities. And this also means they will need to increase their equity and raise capital on the stock exchange to keep their warehouse lenders happy. It's a tough choice between Plenti and Wisr because they are both losing money and I still do not know why they have been losing money for a number of years. I also do not know when they will start to become profitable. but I think I would rather go with Plenti at this stage. Plenti has a lower operating cost as a percentage of their loan book. Wisr may start having lower operating costs in the future because they spend a lot on growth initiatives, which will not go on forever, but I'm not sure when these growth expenditures will actually stop. If I look at credit losses, both Plenti and Wisr seem to have similar level of credit losses. They also have similar interest margin and similar level of growth in their loan originations. So I think I'll just go with one factor that I know to be different, and that is their operating costs. Let me know what you guys think of Plenti and Wisr. Have I made a mistake somewhere? Or did I miss something? I would love to hear from you.